It was only 7 months ago that Tesla reached the $1 trillion market cap, joining just a handful of other companies. Today, Tesla stock is a far cry from where it once traded. The stock is down roughly 40% from its previous high and around 39% year to date. The once $1 trillion market cap company now stands at around $763 billion. We've seen that the company is still hitting new vehicle delivery records and new revenue records, so why is the stock going down? More importantly, is it a buy? Hi, my name's Kylie, welcome back to the channel. Today we're going to be talking about the recent fall of Tesla and whether it presents a good buying opportunity for investors. So I actually did another video on Tesla and whether it's overvalued a few months ago, and I got a few requests asking me to share my personal views more about whether I think Tesla is a buy or a sell. So if you want to hear about that, stick around to the end of the video. I'm going to share exactly what I think about Tesla and whether or not I'm buying it. Just a side note before I go on, I do hold some Tesla stock, but I am by no means a hardcore Tesla enthusiast. I'm going to try and keep this video as objective as possible. Okay, so let's talk about what's happening with Tesla stock and whether you should buy in. Alright, so why is Tesla stock falling? Tesla reported another record quarter in the first quarter of 2022, with year-over-year increases in revenue and vehicle deliveries, massive profit growth, and an operating margin of over 19%, more than triple that of last year's first quarter. Gross margins on Tesla's vehicles also grew to a hefty 32.9%, driven by growth in vehicle deliveries and reduced costs per vehicle. Just to compare, the average gross margin in the automotive industry is 14.25%. That's according to data from New York University. This means Tesla is efficiently spending and successfully navigating higher costs. Okay, so then why is Tesla stock falling? Well, there's a couple of contributing factors. Firstly, Tesla, just like most other tech stocks, have been getting hammered since November of 2021, when surging inflation became the hot topic of discussion and the Federal Reserve began signaling it would crank up interest rates in the effort to cool off the economy. Since then, the markets have fallen into bear territory, retreating by at least 20% from their recent highs. This decline is led by the tech-heavy NASDAQ Composite Index, which is down by 24%, or 32% just 2 weeks ago from its November high. It's worth mentioning that inflation itself is expected to hit car makers, including Tesla, pretty hard over the next 1 to 2 years, with raw materials, crucially including the price of lithium, expected to skyrocket. Second, Tesla is also down around 21% since its CEO Elon Musk said he'd intended to buy Twitter back in mid-April. Musk's initial plan to buy Twitter for $44 billion included a $12.5 billion loan that was secured against Tesla's shares Musk owned. That might have startled some investors. Plus, COVID shutdowns in Shanghai, which is the home of Tesla's Gigafactory 3, component shortages affecting the entire auto industry, also impacting inflation, and recent accusations of sexual misconduct have all likely contributed to the stock sell-off. Okay, so how profitable is Tesla? Well, Tesla first turned a quarterly profit back in 2009, but it wasn't until 2020 that the automaker actually had a profitable year. Since then, Tesla has been blowing away forecasts from Wall Street pretty much every quarter. The company continues to post record profits, and it's been doing so amid supply chain woes that have been impacting the entire industry. That said, a portion of Tesla's revenue does come from regulatory credits. In short, Tesla makes money by selling regulatory credits to automakers that don't meet the required quota. In the first quarter of 2022, Tesla made $679 million from selling its credits. That number's even higher from the year before. In 2021, it bought about $1.5 billion in total from these credits. Still, it can't be denied that Tesla's profit margins have improved dramatically over the last couple of years, and most of Tesla's revenue comes from actually selling cars. Tesla said its margin on cars was 32.9% in the first quarter of 2022. The rest of the company, like its solar panels and its at-home charging segments, don't actually make a lot of money, which brings Tesla's overall profit margin down to 19.2%. Regardless, no other automaker really comes close. For instance, while they still produce far more cars than Tesla does, Ford had a margin of just around 7% and GM had a margin of just over 10%. Tesla said it's been increasing vehicle vehicle deliveries, it's been reducing the cost per vehicle. Oh yeah, and Teslas aren't cheap. All of that driving Tesla's profitability. Okay, so why you may or may not want to invest. We'll start with the positives. Tesla's strong growth momentum will likely continue into 2022, especially now that it's begun delivering vehicles from its Gigafactory Texas and Gigafactory Berlin Brandenburg locations. Tesla is also focused on building out its in-house battery cell production, which should allow it to better navigate current and future supply chain issues that are bogging down other EV makers which must outsource their batteries. If analysts are right, which certainly isn't always the case, investors could see a 19% upside to its current price. Analysts, on average, see the stock returning to $922 over the next 12 months. As for how I view Tesla, well, like I said, I do hold Tesla, and I am seeing this crash as a buying opportunity tentatively. Yes, Tesla stock is down, but the reasons are largely event-driven, which means that they're temporary. That includes the Twitter deal and the bad press surrounding that and other recent scandals. Yes, inflation could impact Tesla and many other car makers for months, possibly even years to come. But again, while it's a longer-term thing, it is still temporary. What I am wary about is growing competition in the EV vehicle and battery storage space. But back onto cars, while Tesla is in a strong position to take advantage of the growing demand for EVs, Tesla itself is still a pretty small player in the global car maker market, with Toyota and Volkswagen continuing to dominate. And while these major automakers may not be producing as many EV vehicles as Tesla does, that's definitely going to change. Just looking at the numbers, Volkswagen sold around half the number of EVs as Tesla in 2021, but those sales figures had doubled from the year prior. And similar trends can be seen right across the board. As to which EV car is actually superior out there, well, that is definitely not my area. I'll leave that to you. Please let me know what you think. Anyway, I'd love to hear from you. What do you think about Tesla? Do you think it's a buy? Are you holding? Leave your thoughts in the comments below. That's it from me. Thanks, guys.